Hello, John Burley here. Great to be back talking with you guys again. Remember to let me know what you want to hear, leave your comments and your feedback, hit the subscribe button. I want to talk to you today about why I chose the asset class real estate. So, a lot of you know this, many of you don't. I actually come from the brokerage industry, so from the world of Wall Street, as it were, where I worked in the traditional financial planning and worked in the private equity side. And there was a lot of things I liked about the brokerage business, but there were some things I didn't. And I think when I nailed it down, what I really, really liked about the real estate as an asset class, and let me be really clear, I'm not emotional about my asset class. This is one of the great trainings I got out of Wall Street is, first of all, most everybody I knew was a specialist. They didn't do everything. Yeah, they didn't do like what a mediocre planner does and try and put you in 10 different types of investments and 5 different investments and try and be all things to all people. They didn't. I mean, I literally knew several buck a year people. Over my lifetime, I met hundreds and hundreds. And a buck a year is somebody who makes over $1 million a year. And I'm talking about going back in the 80s making $1 million a year. $1 million a year is still a lot of money. It's way more in the 80s than it is today. And so I hung out with a lot of buck a year people, and I literally one lady, all she did was annuities. I knew several that just did whole life insurance. I knew some that did the universal and the variable life products. I knew others that just did commodities, that just did FX, foreign exchange, that just did options. I knew others, that did futures, all kinds of different things. So we all gravitated, those that were making a buck a year, pretty much across the board. 95% of what we did was just the same transaction over and over and over and over again, which is one of the reasons why we mastered it, why we became so great at it. And I knew several people who made tens of millions of dollars a year trading their own accounts. It's consistently year after year after year. And in the real estate, there's different partitions within the asset class. I've done all the classes of real estate. We've predominantly done single family home portfolio. In 1989, we actually went out and we were the first one to, on a private equity type basis, a fund type basis, if you will, for many of you, to actually go and deploy massive amounts of money and buy hundreds and then thousands of single family homes back when nobody did it. Nobody did it like that. And so we were literally the first out. We had to develop a lot of systems and the models. It took us about 18 months to really get it down because I had to completely rewrite the world because, traditionally the relationship between financial advisors and their clients is adversarial. What's good for the traditional planner is bad for the traditional investor and vice versa. Most models, most things that are Wall Street type models or hybrids of Wall Street models are designed to maximize asset management fees, transaction fees, management fees, and they're designing their models and their systems to maximize the fees, which makes sense. That's how they get paid. And we all go, oh, it's terrible. So, if you were doing it, you'd do the same thing because that's the model. What's good for the investor is bad for the client. It just doesn't match. And so when I did real estate, first thing out, I was getting my CCIM, which is the highest designation at that time available for a realtor. And I was, going to all these courses learning about property management. And then I figured out that, wow, what you're doing is you're teaching me how to screw me because I'm the capital investor. You're teaching me how to screw me out of the profits. And so we designed a model that took out all the adversaries. We were completely aligned. At our private equity company that I founded in 1989 is literally every dollar I spend, I lose 50 cents. Every dollar I make 50 cents after the threshold that goes to the client first. And so we do everything we can to minimize expenses and maximize returns so the clients make far, far more. So we took the adversarial out. It was part of things we needed to do. We needed to completely change the paradigm and the model between the resident and between us as a management company and get rid of that adversary. And so we did. So I just love the Class B single family home. We also done lots and lots of multis, lots of commercial. We'll talk in another episode, the different risk factors. Because here's my bet. If I'm in a solid Class B, so not Class C, don't do Class C, ever. And Class A, numbers just don't work, and sometimes the residents are pickier and more trouble than Class C residents. Class B, regular people, regular houses, kind of like, here's my bet. And obviously we have all sorts of people living in the homes, but the normal would be a mommy and daddy who are married. We have lots of people who are single and same-sex people, et cetera, et cetera. But the normal, the majority would be the stereotype, and we use stereotypes because they're mostly true, would be a mommy and daddy who are married, who love each other, who have children, and they both work. And here's my bet. My bet is this mommy and daddy who are married, love each other, and both work can make enough money every month to keep a roof above their heads and food in their children's belly. And in America in 2023, I love that bet. Because right now, where I live and where most of you live, yes, there's some white collar, there's some tech employment pain going on, but regular people who live in regular neighborhoods, who have regular jobs, if they're not working right now, it's because they choose to be unemployed. There's 100%, virtually 100% employment for everybody who wants a job, who's in the blue collar type pay scales. I love that bet. And then what we do is, it's like, people are like, well, how come you don't get hurt big on the downturns like everybody else does? It's just like, well, because like the last one, 2007, 2008, most of my residents were 40 FICO points away from a $500,000 loan. And I put them into a $200,000 home they could afford. So then when the market tumbles down, they still got a great monthly that they can afford. All they did was just hunker down and make their payments. We actually, in the 9, 10, 11, 12, 13, that 5 years, we had the highest retention rate in the 33 years of the company because they just hunkered down and stayed and paid because it was their home. So I like Class B. I like residential. We do commercial. I'm sitting in a commercial building I own right now. We do land. We do development. We've done all the different sectors. I like the Class B single family home because it has the least market risk. See, because my residents who, for the most part, are buying the home from us, good times or bad, as long as I did a proper job and put them into a home where they could win, they just stay and pay and take care of it as if it was their own, because it is. It reduces my cost a lot. It increases my income streams a lot. But here's the big thing I liked about real estate. I can come in and I can start out highly leveraged, and then it will deleverage, pay down the debt, not refinance the debt. And we don't do a lot of refinancing because if I need new money, I make phone calls and I raise new money. I don't take my good assets and destroy them, which we've seen so many people do in the last few years, where they literally, I meet people all the time like, oh, man, I wish I hadn't refinanced those properties. I bought them in 18 for $200,000 and I refinanced them for 4. And, I bought a few houses, but I spent a bunch of the money and now I barely have any cash flow and the market's too, I don't know what to do. They're just lost because they killed the golden goose over and over again. So what I love about it is I can start highly leveraged. I can use other people's ability to borrow, other people's money to buy or put down payments very freely, very liberally, very openly. I can also, when I trade, unlike the stock market, literally, the way we teach you to buy and the way we buy, if this was in the stock market, it would be insider trading. Here, it's encouraged to go find out exactly which properties on which streets do the highest levels of income stream and why, and then understand it and seek out only those while you disregard a large portion of the market because you're only looking for the properties that give you the highest income streams or that you buy at the lowest price. We can buy off market. We can buy on market. We're unlimited in what we can do. We can bring money in from all sorts of different sources, legally, ethically, morally sound. We can do what we want. But the best thing I like about it is that regardless of my leverage, as long as I can make the monthly payment, and I don't do the sophisticated financing techniques some people teach, which then turns your control over your property and your financing to the lender. We never do portfolio loans and things of that nature for a very great reason, which if you want, let me know. Put the comments down and I'll let you know why we don't in another episode. What I love is that as long as I can make the payment, it doesn't matter what the value is or what I owe. And the market, unlike the stock markets, it moves very, very slowly. I can go on vacation for 6 weeks. If the market goes up or the market goes down, it doesn't matter. If the valuation of the properties drops, the bank doesn't call the loans like they would if I had stocks on a margin, if I do leverage on a stock trade. It's long term. I can do a deal once, and in our model, I literally get paid for decades, over and over again, month after month after month after month. I have some properties I've been paid on for over 30 years and still get checks every single month. I love the slow, long-term passive income. I'm not saying it's the most exciting thing in the world, sitting and collecting a check every month for decades for doing a deal one time. Putting together a deal was exciting. Getting it all monetized was exciting. But the rest should be boring, because if you look at great companies, one of the things they have in common, their operation side is pretty boring. Just the same people doing the same thing over and over and over again, making big money every single month. So I love the real estate asset class. I particularly love the single family home because it was so overlooked for so long by Wall Street. I love the long-term plays. I love the passive income stream while still having the ability to raise capital, to raise cash, to take money out, to do short-term trading when I want to or need to, but I love it that it was designed long-term. Heck, the mortgage, 30 years, it was by design, a little decades-long investment. So it just matches my personality, matches what I wanted, which was freedom, not a new job, and it gave me that. So look, you love what we're doing here. Follow us on Instagram at john.burley. Go to Facebook. Join the John Burley Real Estate Investors. Investing. It's our Facebook group. John Burley Real Estate Investing. It's our Facebook group. You can find out a lot about what we're doing, ask a lot of questions there. And then here on YouTube, hey, like, comment, subscribe, and in those comments, let me know what you like about it, and let me know what else you want, because I'm here to serve, and you let me know what you want, and we'll provide it for you. This is John Burley saying thank you, and God bless. You take care.